Hey guys, and welcome back to the ASX Investor Channel, and welcome to another CEO interview. Today we're diving into the story of Leo Lithium. ASX LLL is fresh off their IPO. They've been spun out and demerged from Firefinch. There's been a lot of excitement surrounding the Leo Lithium story, particularly on the back of the EV thematic and the need for lithium to feed into global supply chains. Today we're joined by their CEO Simon Hay, who's got a wealth of experience. He was most recently CEO of Galaxy Resources, which of course has merged with Orocobre to form leading global lithium producer Allkem.
Welcome to the channel and enjoy.
Today we dive into the story. Simon Hay, welcome to the channel, mate.
Great to be here. Thanks for the opportunity to be on your channel.
Fantastic. Before thinking about everything and talking about all of the specifics, it'd be great just to get a bit of a sense check. It's finally gone through. The IPO has been complete now. How are you feeling and what was your take on it all?
Yeah, it was all really positive. We brought the company to the market at a difficult time. We priced the IPO at late April at 70 cents per share. And since that time period, the lithium industry and a lot of the lithium equity names have really retreated in value. So we listed at 2 months after the price was set at 70 cents. We listed at around 55 cents. It's been difficult times, but we're not the only ones suffering at the moment. And the way we look at it, there's a real disconnect between the equity valuations and the chemicals and spodumene pricing. Pricing of our commodities in the market has remained very firm. Spodumene pricing remaining at $6,000 per tonne at spot levels. Chemicals pricing well above $60,000 a tonne, and yet equity prices have really come off. So yeah, that disconnect, as I say. But getting back to your question, it's really pleasing. We're now a completely separate company, standing on our own 2 feet, with the challenge of developing the Goulamina project in front of us.
Fantastic. And for those viewers who might not be familiar with the Leo Lithium story yet, did you want to give us the strategic rationale behind that demerger and what you're really hoping that it will help to unlock?
Yeah, absolutely. So the Firefinch held 2 assets in Mali, the Marilla Gold Project and also the Goulamina Lithium deposit. And a lot of investors, had different motivations. They often get a pure play gold companies and you have pure play lithium companies. And together in the one house, it didn't make a lot of investment sense. So the demerger rationale was to separate and to have 2 separate pure play projects, gold and lithium. So that was why they were separated. We got tremendous support from the Firefinch shareholders. The vote was, I think, 99% positive at the demerger time. And also the whole strategic rationale really resonated with the new shareholders that I've talked to, with investment funds, and they really see that logic as being compelling. And we now have a well-funded pure play lithium project on the ASX with Leo Lithium.
That brings us to where we are. I've got to ask you as well. You've obviously gone through Galaxy, multi-asset project there. You used to bring your projects through to production, and now you're at Firefinch, Leo Lithium. What is it that's exciting you about the story and that got you really reinvigorated for this new challenge?
Oh, look, firstly, it's the Goulamina asset itself. It's a 100 million tonne resource, 50 million tonne reserve. And, on a world scale, that is quite significant. We'll be in the top 7 or 8 lithium spodumene projects worldwide when we come into production. And we're building it at scale. 500,000 tonne per annum spodumene capacity would place us number 2 at the moment behind Greenbushes. By the time we get into production, others will have expanded. So we won't be at number 2 at that time. However, we'll still be top 5. So to come into, such a buoyant commodity as is lithium, world-class project being Goulamina. And of course, I wanted the challenge of doing something creative, something, that takes a lot to bring together. Other attributes about the project, well-funded and offtake in place. So there's a lot of those key project risk elements had already been ticked off. And that's really what got me interested in this project.
And just sticking on the Goulamina project there, we've got So a lot of the building blocks already in place, as you've mentioned. I think you've got first half 2024 outlined as that potential production start date. Can you walk us through the pathway towards production and those key catalysts that investors should watch along the journey?
Yeah, so looking at the project schedule, the key points right at the moment where a lot of the effort is focused is obviously design. We have design underway. We have early procurement underway as well. We're very close to finalising a ball mill order, and we'll come out with some details on that shortly. There's a lot of other tender packages are being sent out, assessed, and close to award. So they're the key focus areas. In the near term, we start to mobilise our team. So the project managers, project director, our EPCM consultant, they all start going across later this month for their first visits. And then the teams will start to mobilise around September after the wet season. And then sort of construction activities really getting underway around December, January. So they're the key early milestones. Construction schedule is around, total project schedule is around 2 years, construction about 18 months. As you say, 2024 half one is first production. So first ore to the mill, sort of late Q1, early Q2 of 2024, and first product 6 to 8 weeks later. So we would expect to be ramping up production in the third quarter of 2024. So that's a broad outline of the production schedule.
Fantastic. And as you said, just that stage one would get you to be globally significant. Obviously, there's a stage two plan as well, 800,000 tonnes per annum. I'd like to ask as well, stage two, potential for downstream aspirations. How are you thinking about all of that?
Yeah, absolutely. But maybe before I go on there, just to reiterate, stage one product, we have an offtake with Ganfeng. Obviously, massive global lithium player. Once they provide a $40 million US debt facility, they move to 100% offtake. So stage one offtake will be pretty well locked away all with Ganfeng. Stage two, we're certainly open to all options here. You know, the location of Goulamina and Mali being in West Africa, it's very close to Europe, very close to North America. So we're certainly mindful that those two regions are very short of lithium, and yet their electric vehicle value chain is really building out. So you've got the automakers, of course, they're building out. Some of the chemicals producers are building cathode active material facilities. They need conversion facilities as well. So we're certainly open to those options that stage two product could go into those regions. And our JV partner, Ganfeng, is also really open to those options and also to partnering with us on conversion. Now, this stage two is a number of years down the track. We're obviously focused on stage one, but we'll keep all options open, and we'll certainly study these opportunities that are in front of us.
It's not often as well that you get to partner with such a blue chip leading global player like Ganfeng. Can you talk about what that partnership means and how you're really viewing it over the longer term?
I think short term, what they provide, first of all, funding. We've got 130 million in equity, 40 million in debt coming. So there's 170 US of our 255 capital. So that's the obvious thing they bring to the table. Secondly, the offtake. Thirdly, the processing ability. They've already had significant input into the flow sheet. They've helped optimise it, and that's really welcome in this industry, which is, you know, still relatively small and can be quite complex around the technology and the processing side of things in particular. So that is very welcome. I also call out their market intelligence. You know, they are connected to the market across a number of touch points, so we get great market intelligence from them. They also supply a lot of the tier one electric vehicle makers, Tesla in China, BMW in China, all the Chinese major EV producers. So yeah, they're really well connected. They're entrenched in that electric vehicle value chain, and great to have as a partner. They're really supportive, good people to work with. I'm enjoying the relationship so far.
And just staying on that stakeholders discussion as well, we know that Firefinch retained around about a 20% ownership. There's going to be the opportunity for shared capabilities and knowledge, obviously still located within Mali. Can you talk about that partnership, but also what investors should make of the recent share Selldown as well of around about $13 million worth of shares recently?
Yeah, that's a very good point. So that recent share sale, Firefinch have some issues on their side. I think it's very public in what is occurring there, and they needed that capital, so they have sold down, I think it was 28 million shares. So they now hold about 17.6% of the company. That remaining shareholding is escrowed for 2 years. They cannot sell that. So I think that gives us certainty in our shareholder base for the next 2 years that there won't be, that stake won't come up. If I then look at, their recent issues, I must point out that the issues that Firefinch have are totally separate to Leo Lithium. We're not experiencing any of those issues. They are purely operational, it seems, at their side. Our project has been completely unaffected by any of those issues. On an ongoing basis, we will still cooperate where we can. We still have a very close relationship. There's some shared services. There's some employees who service both companies. Now, this will logically separate over time as we grow our own teams and we mature and develop our own company. But I think there's a lot of advantages of staying close with Firefinch. We're both based in West Perth and we both have operations in Mali. So longer term, there's still going to be value in cooperation.
Yeah, appreciate that overview. And I guess sticking on the Malian theme there, we know that there has been some unrest, but recently some sanctions as well were listed. Can you talk about that recent news and how investors should view the current Malian region as well?
Yeah, look, this was a really positive development. We've always been optimistic that the sanctions would be short term and would be lifted. And that was the case where the majority of the sanctions were lifted earlier this week. And that was a result of the Malian government committing to a return to democracy in early 2024. There'll be presidential elections February 2024. And the ECOWAS bloc of 14 other West African countries acknowledged that and relaxed some of the sanctions. And those sanctions include closed borders with some countries. And this is quite important for the Goulamina project. Our main trade routes are through Côte d'Ivoire and Senegal, and those two borders were closed. Now, this wasn't impacting us at the time because we're not bringing in capital equipment until later this year. But to have those two borders now open is really positive for our project. And of course, in the future, our product will go out through Côte d'Ivoire predominantly. So yeah, it's a great development. Some financial sanctions on the Malian government also lifted, so that frees up some cash in country. So yeah, we think it's really positive. Just on our government relationships, they're very strong. You can see that with the Minister of Mines attending our opening ceremony a month or so ago. Every time I'm in country, I meet with him, and he's hugely supportive of the project. They're very proud of the project being such a large lithium project in Mali. They see great advantages in diversifying away from gold and into another key commodity that's going to be huge for the world over the next few decades. So yeah, we're getting a lot of encouragement from the Malian government and all the regulators.
It's great to hear of that support. Of course, everyone's familiar with the tailwinds for the sector there. Love to just hear your personal thoughts on it. We know there's a lot of noise, but a lot of attention as well in the lithium sector. What's your outlook for it and how do you see things playing out?
I think the future is incredibly bright. You can see the automakers are retooling their production lines. They're shifting to electric vehicles. And these are fundamental, profound changes. They won't be reversed anytime soon. So, and you can also see at government level incentives for that conversion to electric vehicles and penalties on the other side of the ledger, the internal combustion engines. So I think these changes are durable, long-lasting, of course, and will persist well into the next few decades. I think some other key evidence for that is just the enthusiasm and encouragement of Ganfeng to bring this project on early. They have brought forward the construction of their converter that is going to take the Goulamina product. They brought that forward by about 6 months. They're encouraging us to bring Goulamina online as fast as possible. So that to me speaks volumes, where you have this big global lithium player saying, hurry up, bring this product to market. I think it's irreversible, this change, this groundswell of momentum behind the electric vehicle and the lithium-ion battery industries.
There's plenty of excitement there, I guess, and on a personal and company level, you must be excited to have the IPO behind and be able to fully focus on it. Just wanted to open it up for you now. Any final reflections that you had for those shareholders who have followed through from Firefinch, or those who might be looking at the Leo Lithium story now with new eyes?
Look, I think there's still a lot of upside with the project. We're drilling, for instance, this year. We're doing infill drilling, of course, just to improve the knowledge around the first pits that we will mine, but also the deposit's open at depth and along strike, where we are experiencing pegmatites in some of these step-out holes and infill drilling holes. So that's fantastic. That'll take us a period of time to complete the analysis and look at our ore statements again, resource and reserve statements. So that will come up later this year. I also think we are very undervalued. When you compare us with a lot of our peers who have multi-billion-dollar capitalizations on equivalent or inferior projects, inferior in terms of scale or grade, there's always an African development sort of discount, and we're aware of that. We need to prove, as a team, as a company, we need to prove that we can build a project and we can bring it online, and we'll see a de-rating over time. And if just to conclude, if I look at the project, we're funded, we're underway, we have all our material permits in place, we have our ESIA, our tenement is secure, we have offtake in place. So yeah, it's all up to us now to bring this project to fruition.
It's going to be fascinating watching that pathway towards production. That is the Leo Lithium story. It's now listed on the ASX LLL. Simon Hay, thank you for joining us. Looking forward to watching the pathway up ahead and look forward to having you on the channel once again.
Pleasure. Thanks for your time.